Good morning. This is a morning brief styled update of the U.S. stock market. I'm Rich Posson for Critical Point. It's March 11th. It's 8:21 a.m. Eastern Time. You're looking at the daily chart of the S&P 500 E-mini stock index futures, and you can see the market has rallied well since our call made a few days ago for at least a level 3 bottom that occurs during a month. It's how we do business for a month. It's possible it was the more important level 1 bottom that originally we called on February 1st, and it doesn't change anything since they were near similar prices. So in tomorrow's weekly update, which will be locked up for subscribers, whereas this morning brief, I'm going to make it available to the public, we will discuss these larger trends and how are these level 3 trends going to zigzag within those larger trends that are going to build into still larger trends for our long-term bull market for this decade. Okay, and we'll discuss the targets we have going into next year, into 2024, and for the decade, and what might go wrong along the way. How can we be useful to assess the market on a shorter-term basis while staying focused on that long-term bull market? Now, basically, this market was supposed to, earlier in the week, we said it would rally into at least tomorrow. Ideally, however, it should rally into next week. And it's looking strong enough so far to finish the week off. I think it's probably going higher into next week, when we'll look for a wave of level 3 type sellers are going to put the market down. Our model tracks 12 major groups of market participants, and we view these as the major impactors, major influences. They make or break the stock market. They run the show. And we want to know what they're up to. We don't really need to know their techniques. We really don't need to know what they're forecasting and their fundamentals. We need to know what they're up to. That's our number one fundamental and quantitative price output that we want to present. That concept can actually lead to forecasting the overall bias or trend of fundamentals when something can change. So we can forecast sometimes better than the fundamentalists and economists when a change is coming, but we may not know the details. So we then try to also do the fundamental analysis, the economic analysis, and put a little business cycle slant on it to come up with something even a little deeper and better. But it's just fantastic how you can dovetail this to the work of others, and you can see, you can almost forecast when they're going to change their mind and forecast. It's a unique form of analysis. 5-day average is nearby support here on the technical side. Looks like the market is eyeing the record high, that they want to push it to the record high. They may well get a record high by tomorrow on into sometime next week. But they should then make a pullback next week, maybe even to the following week, before another leg higher. And the key is, what are those larger trends doing? What are the bigger, more important groups of those 12 groups doing to create those larger trends? Because that'll tell us the bias of these level 3 trends. It'll give us input so we know what trend we want to follow and how to time it. At any rate, that's my analysis as of this morning. It's looking good. Basically, I think investors are upset that they got scared out of positions here over the high interest rates. And in the weekly update tomorrow for subscribers, we will discuss the interest rates, the dollar, maybe Bitcoin, the crude oil market, as far as things that could impact the stock market. And then, of course, we want to review short-term all the way to very long-term trends for the U.S. stock market. And if we have time, we'll take a look at the long-term of some foreign stock markets. Manage your risk relative to the analysis of others and your own. Have a great day, weekend. And if you're not a subscriber, sign up and be ready for that weekly update tomorrow for the U.S. stock market.